Morning, Steve Free in Chicago with the morning grain comments. Hope everybody had a good weekend. Certainly was wet over most of the Midwest. This week we should have mostly drier weather. Temperatures probably closer to normal. 6 to 10 day and the 8 to 14 day calls for normal to above temps, but normal rains, especially in the southern part of the U.S. As far as overnight, grains down a little bit, beans unchanged, corn down a penny, wheat down a penny. I think we'll be watching pretty closely. The dollar's lower, crude's lower. Asia and London's closed for May Day. We've got some good outlooks, maybe better outlooks for Argentina weather, and these might be offering some resistance. Some of the headlines: Goldman Sachs said that they thought the U.S. Fed would raise rates 3 times in 2016. Last week the managed funds bought 110,000 corn contracts, 25,000 beans, 18,000 meal, and covered 27,000 shorts. So it was a big week for the funds, but maybe not as big a week for price changes. Bears still feel that prices could go lower if we have normal weather this summer. The annual Kansas wheat crop tour is this week. Most think that the Kansas crop is around 320 million bushels versus last year's 322. May 10th, we got the USDA supply and demand report. It's the first time they come out with 16 and 17. The only change for 15 and 16 is they could raise the bean demand and lower the carryout. Numbers for 16 and 17, they could lower the bean carryout to 300. The corn carryout could be as big as 2,400, and the wheat a little bit over 1 billion bushels. So the key for that report is whether or not the USDA increases demand for beans because of what's going on in Argentina. We also are afraid that China might announce their corn reserve program this week. In checking around with our best sources, it sounds like they might own more corn than the 100 million metric tons carryout that the USDA is using. They could come out with an initial auction number. They could start auctioning so much per week. The price could be below the domestic price, and it could take up to 7 to 10 years for them to get rid of these reserve stocks, considering all the crops they grow and they try to rotate and try to get rid of in a domestic market. This could slow their imports of feed grains, could actually raise the chance they could export a little bit corn, and if all this kind of falls together, could be actually a bit bearish to corn prices. But we still have to worry about what happens this summer as far as weather is concerned. So we're sitting here kind of trying to be friendly to beans, maybe a little negative to corn, and wheat's kind of a follower in all these outside market moves. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.